Hi, welcome back to the channel. So CBK has released the prospectors for the October 2024 auction, and they have reopened papers or treasury bonds which had been earlier auctioned. In fact, one was auctioned in 2016 and another one was first auctioned in 2022. Now today I would like us to go through one of these papers, that is the FXD1 2016 paper. Now, when this paper was first issued in 2016, it had a tenor of 10 years. And I told you before that when a paper is reopened, it is reopened with the same terms and conditions that it was first issued with. Now, these terms and conditions will include things like the coupon rate, it's in the prospectus. The tax rate is in the prospectus, you can know that. The maturity date is known and the coupon payment date is also known. Alright, though some of these details you'll also know them when there's a new issue. Whatever is different with reopened papers or tap sales is that the coupon rates is known, it's predetermined, because it's at the same terms and conditions as to when the paper was first issued. Now, two papers have been issued today. Two papers have been reopened today. I would like us to go through one of these papers which has been reopened, and my interest is in the 2016 paper. Now, this treasury bond, which is being auctioned in October 2024, was first auctioned in 2016, and it was a 10-year paper. Now, of course, from 2016 up to now, we are left with 2 years to go. 2016 to mature in 2026, and now we are in 2024. So we are left with 2 years to go, 2 years to maturity. So as you invest in this paper now, which was first auctioned or was first issued in 2016, you just know at the back of your mind that we have 2 years to maturity. So it's a 2-year paper. To be more precise, a 1.8 term paper. Now, when it was first auctioned, back in 2016, the coupon that CBK has been paying on this paper from 2016 up to now and up to maturity has been at the rate of 15.039%. And this paper carried with it a tax rate of 10%. This video is going to be one of the shortest videos I'm doing, so press the subscribe button, yeah? So it carried with it a tax rate of 10%, and coupons were being paid in February and March. So if you are to buy this paper now, you'll be earning your coupons in the month of February and in the month of August. Sorry, not March. February and August, right? And it has a net coupon of 13.535%. How did I get the net coupon of 13.535%? Assume you're investing 100,000 shillings at the rate of 15.039%, and it has a tax rate of 10%. You'll have 100,000 times 15.039%, you'll get your 15,039 shillings, and then you subject it to 10% tax. Your net investment, your net coupon will be 13.535%. So if you invest 100,000 shillings on this paper, every year for the next 2 years, CBK will be paying you 13,535. Now, given that this is reopened, it's a reopened paper, it will either be sold at a discount, or it will be sold at par, or it will be sold at premium. CBK will be telling us that, but I expect it to be sold at a discount because the rate is lower than the prevailing rate. How do I know the prevailing rate? The results for the treasury bond, the treasury bills for this week is at 16.7999%. And how did I get that result? I'll tell you. Now, on your WhatsApp, when you go to the status, you'll find channels up there. So click on the CBK channel, Central Bank channel. You'll have so many updates over there, yeah? So when you go to the CBK channel, you'll find the Treasury bill results there. So when you see this rebill, this is the 91 days, this is 182 days, and this is 364 days. Okay? So that is how you can be looking at the prevailing rate. You can always make reference to the Treasury bill, the latest bill which was auctioned. Now that the rates are at 16.7%, and this paper is offering us a net return on investment of 13.5%, but their bills are also subject to 15% tax. So the net investment on this week's Treasury bill is 15.119% if you subject it to 15% tax. Now, the market is at 15.1%, but CBK is reopening a paper at 13.5%. What will make me want to pick this lower paper? Or what will entice us to buy this lower coupon paper while the Treasury bill is giving us or is giving you better returns? Now, CBK would have to sell this 2016 reopened paper at a discount. All right? Now, what are the other features of this reopened paper? The auction date is on 9th October. But then I missed last month's auction. I missed last month's auction. I tried putting my bid. When I went to put my bid, it was already 11 a.m. And the deadline for putting bids is at 10 a.m. So if you want to invest in this paper, make sure by 9th October, as early as 10 a.m., you have put your bid. All right? Now, once you have put your bid, the payment for this paper should be made by 14th of October. All right? So those are the salient features for this bill. For this Treasury bond, the FXD1 2016-10. Now I'm going to do a second video to explain to you the salient features of the other paper. That second paper, the FXD1 2022-10, still has 8 years to maturity. Now, one thing that you need to know is that CBK has been working on bringing down interest rates. I keep telling you this every time I do a video on Treasury bonds. And the reason I'm reminding you that interest rates are coming down is for you to make the best decisions for you. All right? Why? Remember that the coupon rates for bonds are fixed. Bonds are fixed income securities. So had you invested when the coupons were at 18%, even now that the coupons are now coming down to 13%, when we are seeing them coming down to 13%, you will continue earning your coupons at 18%. The price at which, the rate at which your bond had been onboarded. So Treasury bonds are fixed income securities. Even when the rates will go down to 10%, you will continue earning your coupons at the rate at which you had invested, whether it was 18% or 16%. So I'm telling you again, interest rates are coming down. They are coming down. If you ever want to invest in bonds, now will be the best time. The other option that you'll be having is to go and buy them at the secondary market. But if you go to the secondary market to buy, the investors who had invested at higher rates will sell you their papers or their investment at a premium. I mean, if you wanted to invest 1 million, you'll need to pay that person slightly more than 1 million. Why? Because they have a higher coupon paper. So I'm telling you again, interest rates are coming down. See you on the next video.